Hello everybody, it's me the Boss Hog, and today I'd like to talk about my performance, I guess, over the last year. My blog is meant to be wealth, health and betterment, but obviously we focused on wealth, and we're going to remark on that in just a second. But to start with, let's go with the investments and financials. I guess broadly speaking, I'm quite pleased with myself on the wealth front. Specifically, that I kept up a regular contribution. I studied stocks. I didn't make too many reckless decisions. Made some mistakes, of course, but that's okay. Managed to outperform the FTSE 350 modestly and underperform the S&P 500 modestly. But broadly speaking, I'm pretty happy with that kind of performance. I've given myself 3 years to see how we compare against the market. If I'm massively short, then we'll just index fund it and be done with it. But personally, I've really enjoyed it. There's no two ways about it. The way I measure my performance is time weighted. That's mainly because I contribute very heavily into, I didn't have any investments 13 months ago. So capital's going in so quickly that it's important to time weight it. So that's what this graph here represents. You can see there on the blue graph, this is technically up to date to about the 26th of December. So pretty up to date as it currently stands, and yeah, it's progressing along. Basically, that's my performance so far, and likewise as well here. So you can see here the light green is my capital. For those who don't know, me and my wife have a 2-year-old. When my wife was on maternity a year ago, we weren't really sure, what COVID was going to happen, what a job situation was going to be like. Her company also got acquired, so we weren't sure what was going to happen with her role. So we had a lot of cash saved up that we basically then we put hard into the stock market, and that's really the reason for that jump there. Since then, I've more or less been doing about 800 a week. But some weeks it's been more, some weeks it's been less, etc. So, and then the medium shaded green there, that's the capital growth basically and profit. And then the dark green on top is the dividends. So you can see here we basically contributed 91k of our own cash, 11.6k is profit, and 2.2k is dividend profit. So again, pretty pleased. I mean, this is way more than we would have got in the bank. Again, here, this second table is absolute return rather than time weighted, in case anyone's wondering why it's not, 23% higher. That's why. So two different ways of looking at it. But yeah, pretty pleased. During the year, I kind of discovered that I wasn't really that into tech. So for most of the year, I had a very tech-light portfolio, and you can actually see in the top graph, in September it was, where the blue line overtakes. I actually made a profit in September because I was so light on tech that I didn't really get impacted, and also my then largest company had activist investor interest, so that kind of underpinned it, so that was quite nice. But to be honest with you, I realized during the year I was like a value investor, and I just love a bargain. I can't resist. So, that's the kind of investor I think I am at the moment. I am looking to tweak that moving forward, but right now I came to realize that, I just love value basically. On reflection, I think the biggest thing I failed at was really patience. I think I was actually quite good at recognizing opportunities. If I look at something like Huntsman Corporation, I don't see that company mentioned anywhere, and I made thousands off of it, and I found it by accident. But then I realized that there was a good opportunity there, so I got in on it quite heavily. My current biggest holding is National Express. Again, I hardly see that mentioned anywhere. I don't think I do see it mentioned anywhere. So, I think I am quite good at recognizing opportunities. But too often I've been too quick to sell when, I was up. Like if I think about Cone, for example, or, some of the REITs like B-Box as well, I was very quick to sell those even when, I was up very well, like 20%, just because that seemed like a good amount. It's kind of weirdly arbitrary. It was like I wanted to profit take, maybe like my conservative nature, risk adverse nature came in there. I mean, it's just something I have to work on. And likewise as well, I think I'm pretty good at recognizing value and opportunity, but sometimes I was too quick to, catch a falling knife and basically build a stake that, even though I believe in those companies, I could have acquired the shares more gradually and now be holding a much more profitable position. And a quote I came across halfway through the year was, better a small profit than a big loss. I think that's a really good quote. I'm not sure who said that, by the way. It's not my own quote, but it's something you should consider. And the best example I have for that is Gamma Communications. I think that's a superb quality company, and it just kept falling. I was like acquiring really much too early, so I could have a much better average price on that than I do have. not that it's too much of a shame because I'm still really confident on the future, but it would have just meant I'd made more money basically, right? So next year, that's something I'm going to work on basically, just to be a bit more patient, hold on to my winners for a bit longer, and build stakes a bit more gently. And speaking of what I'm going to be doing next year, I did feel quite uncomfortable when there was a point during the year I had 55% of my portfolio almost in 3 stocks. It was Huntsman, Bristol Myers, and National Express. And although I felt like all of them were significantly undervalued, I just didn't enjoy it, basically. Like, it was just making me uncomfortable that, all it would take is like an accounting scandal or, fraud or something like event that you can't really foresee. And you'd be pretty, not like ruined, but it would just make a huge dent, and that just wasn't making me feel comfortable. So I'm going to just slightly de-risk my positions, and by that I mean like sell down some of my holdings. My largest stake is still 25% of my portfolio in National Express. Again, I just like to trim that as hopefully it becomes more profitable in the future. And likewise as well, I realized that I kind of like the excitement of like proven, profitable, but fairly small companies. So we're going to be looking in kind of like the low hundreds of millions to a few billion in terms of market cap, and I'll probably times that by about 5 for US companies, just because they're so much bigger. So more in the like 1 to maybe 15 billion kind of category in US companies. But I just think they're fun, they're interesting, they're not kind of like the gamble heavy stuff. Like they're again proven businesses that hopefully have the potential for kind of growth and dividend growth and just growth in general, right? So I'm going to like spend a bit of time kind of going through some of the smaller positions in the S&P 500, some of the FTSE 250 and AIM companies as well, and look to kind of build small positions, but across kind of quite a few companies, and spread my risk a little bit that way. So like I say, I guess to sum up, if I was to be given this as a performance, like as an offer, by hypothetical a year ago, I absolutely would have taken it. Like I got, what's that, 14,000. There's no way I would have earned that kind of money in a bank, right? So from that perspective, that's great. Outperformed inflation, outperformed the FTSE 350. Okay, I didn't keep up with the S&P, but it's not terrible either. It's definitely moving in the right direction. And honestly, I'm relatively pleased with the performance, and I'm even more pleased actually with the kind of commitment that I had, like unwavering. When the market sucked, I still put in money. When I had to crystallize some mistakes and some losses, I still didn't let it get me down too much, and most of the time I was relatively calm. And I did find it quite emotional. Like, if anyone is new to the stock market, like I thought I'd be quite okay like losing money, because sometimes I play poker as a side hustle and I lose pots. You lose material sums of money, but it's a bit different. Like, you feel very distant with stocks and shares. Like, you feel like you're doing all the right things, and yet you're not being rewarded for it, and it just keeps happening. It's like so it was maybe a bit more mentally taxing than I was expecting, but still, I kind of kept calm. I didn't make any rash decisions. Again, I made some mistakes, to be clear, and didn't make the most of my opportunities. But again, if you were to offer me this as like a novice investor a year ago, I absolutely would have taken it. I'm pretty pleased with my commitment and my performance on the wealth/investment side of my channel. Where I'm less pleased is where we're going to get to next, so let's do it. So yeah, although the wealth and investment side of things went relatively well, my health and Betterment could definitely have gone better. And there were some positives though, so let's have a little look at those first of all. To start with, I got a new job. I put this up here because basically my last job I was at for about 4.5 years. I joined specifically because it was part of a turnaround opportunity. I think I delivered really good value for the first like 3 years, but then after that we were more or less just waiting to be purchased, and I just couldn't get anything done I wanted to, and eventually it started to kind of like wear me down a little bit. So I was keen to move on. I was asked to stay for a little bit longer, but honestly I don't think it would have been good for me, or indeed particularly cost effective for them. So kind of pleased to have closed that chapter on my life, and I'm enjoying things with my new employer now, so that's felt really good for me personally. I went on holiday. Again, this is like so what, but between like COVID and having a very young daughter, not being able to travel, being like just having like lockdowns constantly, holiday was very much needed, and although it was relatively expensive, not necessarily relaxing, it was still really good to get away in December, and was absolutely worthwhile, so that felt really great. I got my 2200 on in chess. This is basically just my ranking. It was a bit of a surprise for me actually. Like, I'd been around 21 for a little while, 2100 I mean. I've never really studied chess, but basically I started to do some puzzles, and that just, end game puzzles specifically, and that just really boosted my like attacking edge and like killer instincts, I guess. And it's just like my rating rose really quickly over like a couple of month period, and I think I got an all-time high of like 2208. So that felt really good. It means I can start going for like my full master title now, already a candidate master, so I can start competing to get norms to get that. So that's going to be one of my aims for next year, actually. So that's pretty awesome, and that made me feel really good just to get that. Also got back into poker, so I side hustle poker, but I actually really love playing it anyway. But again, between child, pregnant wife trying to support, right, as well as COVID, requiring like masks and dividers, it just wasn't very nice to play poker even when the casinos were open. So it was good to actually get back in and start enjoying that as much as I could. And likewise, just as I was relatively pleased by how consistent I was with contributing to ISAs and doing investments, all of that stuff, actually like regularly updating my YouTube channel might not sound like a particularly big thing, but I don't consider myself particularly like a natural communicator or presenter. It's not something that comes very naturally to me. I have to work relatively hard just to kind of mentally get myself in the mood. Maybe if you were being a bit mean, you could say that definitely shows. But I try. I started this in March. For the first sort of, I would say, 4 to 5 months, it was very much like I didn't really care about getting subscribers. I just wanted to kind of keep myself accountable because I have a lot of like internal pride, and I wanted to make sure that like I kept myself honest, basically. But then I started to get subscribers, and I think it was when I got to about 30 subscribers, I started to pick up people that I didn't know in any way. People would like drop me nice comments, and it was like, okay, I'm actually really starting to enjoy this. So I kind of want to keep that up. I kind of hopefully want to get better at presenting, better at like doing videos, etc. But I'm still really pleased with the fact that I kept it up. I think I've got like 63 subscribers now, so that's awesome. And I guess next year try and get to 100. Again, there's not really any like big rush on it. I probably won't even make it a formal aim for next year. But just to regularly keep up with my YouTube videos feels really good. So yeah, I think that's my positives outside of investment. But now onto the negatives, and this is a slightly longer list. So I didn't get into any sort of regular workout sessions at all. I did do the odd workout, but nothing that I would consider sort of very repetitive. Yeah, I don't feel particularly fit, and it just didn't happen, basically. So I'm not really sure what else to say. It is something I wanted to do. I just struggled to find the motivation, if I'm being honest. To add to that, in general, I'd say my health hasn't improved. I did go up to 108, like in the early stages of when our daughter was born, for I think fairly obvious reasons. But I think for like the last few years, I've gradually been like getting less and less healthy. And although now I've kind of stabilized around the kind of 104 level, it's a bit higher after Christmas and holiday, but okay, fine. I just don't feel particularly healthy. There was a time during the early year I got it down to like 100, and I felt much better already. So like that's going to be the first kind of mini milestone I'm going to aim for. But in general, I'm a terrible snacker. I can't have crisps or biscuits in the house. I have no self-restraint when it comes to nibbles. And even though I like to cook and I eat fairly well for dinners, etc., my snackage is dreadful. So that's not been helped at all, especially with the lack of workout sessions. I also didn't do as much reading as I wanted, but here it wasn't quite a disaster. I wanted to read 5 books this year. I read 3. It's okay, right? But I could have read more. I was doing a lot of reading of newspapers, etc., but probably didn't quite get the balance right. So this one isn't quite like a kind of like nothing. But again, I wanted to do a bit more reading, so that's something for me to work on as well. Yeah, I did a lot of procrastination. Like, if I'm really honest with myself, like sometimes I'm like, oh, I just didn't have time to do that. Like, I did. Like, I had time and I had energy, but I just didn't have like the mental strength or the real desire to do it. And that's going to be a challenge for me moving forward. But I think if I'm really honest with myself, I procrastinated a lot. No two ways about it. And I'm going to have to work out how to fill those gaps, whether that's like more chess, more poker, more reading, more workouts, right? Like, I should be more productive than just sitting on my ass watching whatever. So that's something for that as well, I think is fair to say is a negative. I also didn't do as much cooking as I like to do. I'm not even really sure why. I just kind of didn't have the, again, maybe the mental focus. I actually really like cooking. I like creating like pretty decent plates of food, depending on what I'm doing. It can be anything from cooking with really beautiful ingredients that I pick up from Borough Market, which isn't too far away from me, to actually kind of like doing like making really good quality, like good nice meals from relatively cheap ingredients is something else I like doing. So it doesn't really matter what. I just find cooking very relaxing. It also kind of gets my creative juices going, and again, I just didn't do as much as I wanted to. So that's something, again, that on reflection I wish I'd done a bit more of, because I think it would be good for me, basically. And last but not least, this isn't just me, this is also my wife, and I think actually my wife's even worse, but she has more of an excuse because, between sort of being pregnant, then when you have a baby, you still have to be careful, what you're eating as a woman. And then we had COVID, me and my wife, been together now for 11 years. We're real foodies, like we spend money on food and drink, and we just couldn't. So when, lockdowns eventually got going, we can now sit with our nearly 2-year-old daughter in restaurants for a limited time. We kind of really took advantage of that, basically. And, we weren't particularly disciplined. We didn't even try to be. We were just like, all right, we're here to have some fun. We did kind of treat our December holiday as a bit of a kind of blowout. And for me personally, I feel like I've got a lot of it now off my chest. I'm ready to kind of double down and focus on investing and wealth building and not frivolous spending. And I'm going to work with my wife hopefully as well, because that's really like a team effort, I think is necessary here. But yeah, we spent a bit too much money, I think, if we're really honest with ourselves. I think there are some good reasons for that. So, and it's not like we wasted it, because we enjoyed it, right? It's not like we did anything that we didn't enjoy. We chose to spend it, and that's ultimately up to us. But it wasn't something that I realistically expected. And I think, ultimately, it did make us feel better. But it was kind of like that short term. We weren't deferring gratification in that way that you're meant to be doing. And if we're really serious about kind of long term betterment, then we shouldn't be spending money, so much money. And even then, like there's what different ways to spend, right? Like, do we necessarily need to have such fancy wine? Do we necessarily have to have such fancy food, right? Maybe I could cook a nice meal instead, right? So there's different ways of kind of managing that I think is kind of going to be something to improve on in the future, and again, something that we could have done better over the last year. So I am going to do a follow-up video to this, specifically looking at very real aims for next year, written them down, going to do like maybe a monthly review or a quarterly review on them. So there will be a follow-up video to this probably tomorrow, and yeah, stick around for that. Otherwise, hopefully you got something out of this. Again, this is mostly for me, but so you can see like my thought process, so I can be transparent with you guys, and again, so I can keep myself accountable, I guess. So that's everything from me. Like I say, it's been an interesting first year. Really pleased on the financial side of it, really not pleased on the health. Bit of a mixed picture on the kind of betterment if I break it down, but again, we can improve from here, and I think that's the important thing, and to be honest with myself and to aim to be better next year. That's everything though, so thank you very much for watching. Thank you very much for watching me for the last year, for that matter, for those of you who have. Otherwise, I've been the Boss Hog. Thanks very much for watching, and I guess good luck with your investing, your health, and your betterment. Bye for now, everyone.